it all on you. And trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it. And if you do, then just shout it loud and clear. I wanna know if you really need it. And if you do, then just shout it loud and clear. Loud and clear. Loud and clear. Loud and clear. Shout it loud and clear. Loud and clear. Loud and clear. Loud and clear. Shout it loud and clear.
Yeah, hey everybody, good evening, good evening, good evening. Let's get the show going here, folks. Let's get the show going here, folks. All right, good evening, everybody. I see a lot of people still joining us right here tonight. And I just want to welcome you all. Oh my gosh, there's all the names coming in here. Wow, from all over the place. Cool, cool. Okay, all right. Love it. Let's get started. Hit the record button and good evening. I was going to say good morning. Good evening, everybody. And yeah, there it is. Welcome. There it is. Welcome to DayTradeSPY.com's Week-In Review for Sunday, July the 26th, 2026. And my name is Hugh. I think you can see me. Let's see if you can see. You know, I think I'm gonna close the blinds here just to block out the light, because I think that's what's kind of messing things up there. The background light is putting me into a bit of a silhouette instead of focusing on me. There it is. All right. Is that a little bit better? Maybe a little lower here, a little lower. There we go. Just to get rid of all that light. There we go. That's a bit better. Okay. All right. All right. Sunday, July the 26th, 2026. And my name is Hugh. Here's what we're going to talk about here tonight. We're going to take a look at the weekend review, look at the upcoming week, and I got a little 2-minute tutorial for you. I'm going to answer some questions. We got a little contest, and I'm going to present that to you. It's the contest is actually very simple. You just have to pick a number. It's not a skill testing question or anything like that. So, all right, let's get started here. All right. Okay, so here's the standard disclaimer. I'm going to give you a couple of seconds to read this while we get everything ready here and check out all the oh my gosh, all the people online here. Nice to see. Here it is on a summer Sunday evening. I'm glad you're taking a little time out to actually view this webinar. And we're gonna keep you short and sweet. Okay, we're not gonna keep you too long. All right, we're not gonna keep you into the hour or anything like that. I say that every week and it sort of spills over that, but we're gonna kind of keep it short. Anyway, folks, you're alone responsible for all your own trading, and past performance does not guarantee future results. All that said, who am I? Why listen to me? Who is this Hugh guy anyway? All right, well, I'll tell you who I am. Many years trading, teaching publicly since 2010. Got some cool techniques from the trenches, and I look for short-term breakout trades multiple times a day. And I thrive on the success of others. We don't have to trade, folks. All right. My cohort in the trade room, John Johnson, and myself, we talk about this a lot. How, you know what? Well, maybe we should just give it up. Do they really need us? Do they want us? Actually, the answer is yes, they do. So that's for that reason we stick around. We teach people, right? Because we enjoy it. We love to hear the success stories, and that's what we do. So that's what we do. And just give me a drink here. I'm getting a little thirsty. Dry throat from talking all day. Well, not all day, but enough anyway. So we learned a few things that make us some money. So, and my saying is, if you want what I have, you got to do what I do. My cohort John saying his definition of success: doing what you want when you want. Right, that's really what it's all about. Now let's flip over to Spy the Market this week's. Okay, this is actually a free newsletter. Anybody who doesn't know, you need to sign up, folks. Go to our website, DayTradeSPY.com, and sign up. It doesn't cost you anything. When the pop-up comes up on the screen, just leave us your email address, and you're going to get this free e-newsletter every Thursday. Just a very brief newsletter, very light, relevant, even entertaining. Go to DayTradeSPY.com. This week's topic: some answered questions, part 2. Yes, people write in with some questions, and yes, we answer them. I don't know of anybody else who does. There's a look at last week, folks. Look at last week on the markets. Just to give you a quick overview. Again, it's not where we've been that's important, it's where we are going that's important. It's nice to know that, but where we've been last week is kind of important too. On Monday, crude oil climbed to over $89 a barrel, pushing inflationary fears, escalating Middle East tensions, and fading early session gains in chip makers. The S&P 500 slipped 0.19%. And then on Tuesday, despite oil rising above $90 a barrel, I just want one little typo in here I want to fix. Get that one space out of the way there. Okay, there we go. Despite oil rising above $90 a barrel, markets snapped a four-day losing streak. S&P added 0.9% in a chip and AI rally, led by a 12% hike in Micron and 14% rise in SanDisk, among others. And I have another little typo I have to correct here. I'm not sure why. Spaces. There we go. Let's get this straightened out. All right. On Wednesday, SPY took a run up the flagpole and right back down again with the S&P 500 slipping 0.13% by day's end. Climbed on oil prices, ongoing Middle East tensions. You can see we flip-flop back and forth, flip-flop back and forth, right? One day it's up, one day it's now down. It's all about oil and inflation. Mideast war, anything to threaten inflation, threaten interest rates, markets go down. Thursday a little bit different here. Despite positive earnings, we had some earnings from Alphabet and Tesla. Earnings were good, but their outlooks were not very pretty. In fact, as a matter of fact, they had some negative free cash flow. That's not good news. Heavy AI spending had investors concerned on future outlooks, and these and on other semiconductor stocks, leading SPY ran into a bit of a tailspin here, 1.2% down, downstroke right down to test 736 on the stock here. And on Friday, we had SPY finishing flat. That came after yesterday's meltdown as oil fell below $97 a barrel, but continued selling pressure with AI, tech, and tariffs jitters. Trump has brought back his tariffs rhetoric and even going as far as I think I'll put tariffs on Canada because of the smoke from the fires, as if Canada has some ability to control the millions of acres, square miles of forests that they have. See, it's not the same as here in the U.S., where our forests are, relatively speaking, smaller, and there are roads going through them, so making firefighting easier and more accessible. Over there, they don't have that luxury. They don't have that luxury. And even adding more fire bombers and different things, it's not going to help. The issue here is the climate. The climate has changed. We are drier, we're hotter, we're drier sooner. I've been reading that we can expect fires to even get worse as the years go by. So get ready for masks and make sure you've got air filters and AC, air conditioning at home and stuff. So, but anyway, threatening tariffs is not going to help the fires. Personally, my opinion is, maybe you should have offered some, help. Wait, we'll say, we have some firefighting equipment. We'll send it up there. We'll get this baby under control right now. Anyway, that didn't happen. So, I recall a couple of years ago when the California forest fires were, Canada did send down firefighting equipment there to help out with matters down there. But I digress, folks. Seasonal charts, take a look at this. The blue line is where SPY is now. Excuse me, and the red line is the average of the last 5 years closing price on the daily charts. Okay, so it looks like we're kind of in a bit of a state of flux right now. Okay, we're not going up, we're not going down, just kind of bouncing around here. If you look at the last 5 years, let's zero in here and kind of focus in a little bit long, pushing in here. Historically, SPY rose about 4 points last week, and historically, SPY dropped about 4 points last week when we look at the last 5 years. So where's it going to go now, based historically? Well, it's probably going to hang around in there somewhere. A lot's going to depend on earnings season. Of course, headline news with the war in Iran. That's always going to take front and center, and whatever comes of that. So we'll see what happens. Renewed U.S.-Iran tensions pushed oil back towards $100 a barrel this week, creating Fed Reserve debate over inflation. We're not out of the woods yet as far as inflation is concerned. The Feds reiterated that they still want to bring interest rates down to that 2% level, and they're looking at working on that, especially with the new Fed chair. Rising interest rates may be a threat again, although the Feds may well hold rates steady in July, according to what I've been reading. But that's not to say that's going to extend into the following meetings. So we'll see. Artificial intelligence remains the dominant stock driver, but that might be shifting from spending to monetization and returns. They're going to be looking to see, okay, we're putting all this money in AI now. What are we going to get out of it? We're not doing this because it's so much fun, right? We're not opening data centers all over the place because it's just a blast, especially when there's a lot of pushback from the communities that they're going in. So we got to make sure there's money coming out of this. So now they're starting to look at that. Rising oil prices may also lead emerging risk into seasonally softer summer months, but underlying fundamentals still remain strong. We'll see what happens there. The U.S. economy remains resilient. And it looks like I have another space I would like to get rid of there. Okay, there we go. U.S. economy remains resilient, stable market, labor market. We've got AI supportive growth and fast rising corporate profits driving gains. Bloomberg Intelligence says that now they expect a 26% increase in profits over last year at this time from the corporate earnings. Also, a lot of pressure on longer-term inflation. Feds are now split on whether they should raise interest rates or keep them the same. And we're seeing those numbers fluctuate a lot. Most analysts still predict that the rates are going to stay the same. Roughly, I think it's about 30% figure that the rates are going to increase, but that changes day to day. By tomorrow morning, that could all be different. So don't put too much stock in any of those numbers right now at the point. Looking at the U.S. initial jobless claims, they're at the lowest since 1969 here, which is actually pretty cool. Weekly initial jobless claims in the thousands here. We had that brief pandemic spike several years ago, a few years ago. Nice to see that we're out of that now, but the economy is chugging along very nicely. So, all right, the S&P 500 went down this week, 0.6%. We're year to date 9%. The Dow Jones, same thing, went down 0.4%. Year to date there too, 9%, and the Nasdaq went down 2.1%. Year to date, 7.8%. You'll see the Nasdaq. That's the one that's going to give you the highest change. That's going to move the most, up or down, because all the Magnificent Seven and all the big tech stocks are in that one, and the overvaluations and whatnot. So whenever there's a move up, they're the first to benefit from it. Whenever there's a drop in price, they're the first ones that get hit. But we're kind of holding steady at 9%. What are we into July? Into July, so 9% divide that by what are we in? Seventh month times 12. I mean, if this keeps up, we should be looking at 16% return on investment by the end of the year if this trend continues on the S&P 500. So, all right. By the way, I forgot to mention, don't forget, of course, there is a questions box. You'll find a icon on your Zoom dashboard. Just click on that. I am the only one that sees that, so go ahead and say whatever you want. Week ahead, Monday, we've got durable goods orders coming in. Tuesday, conference board consumer confidence and the Richmond Manufacturing Index. And on Wednesday, we got the Fed funds rate. That is the big one. And earnings from Microsoft and Meta. I'm going to just highlight this just a little bit to show you that this is actually a little stronger. That's going to be the big news of the week. All right. And on Thursday, we've got unemployment claims as we do every Thursday. Gross domestic product, personal consumption expenditures, earnings from Apple and Amazon will also be reported on Thursday. And on Friday, Chicago PMI, University of Michigan consumer sentiment, and University of Michigan inflation expectations on Friday. So what does this mean as far as volatility is concerned? Well, expected to be medium on Monday, high on Tuesday, Wednesday, Thursday, and Friday. And Q2 earnings season is this week again as we get into sort of full swing with, like I said, several Magnificent Seven stocks reporting. Expect elevated volatility as well when President Trump speaks. I have nothing on the schedule for this week for him speaking, but he tends to come in at the last minute and schedule something in, and then whatever he decides to talk about, he just kind of creates it along the way. So, but anyway, he has a way of moving the markets. So if the speech, not usually the speeches are after the market or certainly after our trading sessions in the morning. I don't see him coming in the mornings, but whenever he speaks, he does tend to move the needle. So, but anyway, expect some pretty good volatility, and with that, opportunities to make money on the stock market. Okay. All right, looking at the 2-minute tutorial right now. Options in a house analogy. What are options? I know some new people are online. They're not really sure what options are, and they've been fielding some questions on that. So I'm going to give you an analogy here, what an option is. An option, so when you, let's say you want to buy a house, right? You actually put in an option to buy the house that you're going to, yeah, that you are prepared to transact that deal for a set price by a certain date, at a certain date. So the house is going to close, say, 2 months from now. Gives you an opportunity to get ready for it, maybe sell your house or do whatever it is, but you would determine the price. So let's say in this case, well, let's just say your house is worth $400,000. So I'm going to kind of compare putting money down on the right to buy your house for a price set later. So let's say you're looking at a house costs you $400,000, and you pay a small fee, $2,000. That's your deposit. And they say it's a non-refundable deposit. Okay, you're obliged, or you know maybe not. I don't know. Depends on the deal. But let's say you're not obliged. But the $2,000 gives you the right to buy that property, right? That house, say over the next 6 months. Let's say you have 6 months to for that house to close. Okay. Trading SPY, we have up to the expiration date in which to make the deal, as opposed to say SPX, which is actually the basket of the top 500 stocks that does close, and you could be exercised at the expiration, not before. But as if you are buying a house, you will close at expiration. So let's say you're paying the small fee, 2,000, to secure the price and the terms and conditions, right? Now the core rule here is that you have the right but not the obligation to buy it. If the market crashes, let's say suddenly something happens and I don't know, suddenly interest rates spike, the value of your house drops from 400,000 down to 350, and you're sitting there with this thing, and say, well, I don't want to pay $400,000 for it. I'm going to walk away. I lose my $2,000 deposit. So be it. It's not good, but could be worse, right? That's what an option is. That's what an option gives you. Similarly, all right, similarly, if you compare the same idea, if the value of the house escalates, then you benefit. You pay the $2,000 deposit, and you're still getting the house at $400,000. So what can happen for that to happen? Well, let's say that house you're looking at actually backs on to a golf course, the ninth hole of a golf course, way out there, right? Well, you know that. Well, let's say it doesn't yet. When you buy it, it doesn't. But in the interim, between putting your offer in and the closing date, the city passes the permission to build this world-class golf course in behind your house. Well, what do you think? Right now it's just an empty field. Well, what do you think is going to happen to the value of your house? Oh my gosh, you're back onto a golf course. Well, that's going to be good news. That's going to add value to your house. So that $400,000 house might be worth $600,000 by the time it closes. And it kind of sucks for be the to be the vendor, the person holding the ticket on the house right now, because you can't come back and say, well, it's worth 600,000. I want more now. So no, sorry, pal, we made a deal for four. He is obliged to give it to you for $400,000. And of course, you'd be an idiot not to take it, right? Because you can turn it around immediately and sell it for $600,000. So you've essentially made $200,000 on the deal. And that's what options are. That's what options are. Now, they are the same thing with underlying stock. That's the value of the equity that we're looking at, the asset. Now there are call options. Calls. Calls give you the right but not the obligation to buy shares if you think the price is going to go up, if you think the price is going to go down. And that's the beauty of what we do. SPY and options, we can make money go both going up and down in the short term. And when I say short term, I'm talking about within a few seconds, minutes. That's what we like to do. We like to get in, make money quickly, get in, get out. And sometimes there's a trade this week. John was in there for, I think, 56 or 58 seconds. And he did very well. I think he made like 14% or something. A put option gives you the right but not the obligation to buy shares if you think the price is going to go down. Let me actually rephrase that. That should not do to buy shares. You're buying the option. It should be to sell shares. Sell shares. Sell shares. Okay, there we are. Let's make this accurate here. So when you buy a put option, what you're really saying is that I have the right but not the obligation to sell shares in the company, right? Um, let me just give me a thought on that. I believe that's correct. Yes. Okay, so you're banking on the stock to go down, is what you're doing. All right, so if you expect the market to go up, you buy a call option. If you expect the market to go down, you buy a put option. You buy a put option. All right, I think it's pretty simple, and I think most of you know that online here, but I know there are a lot of new people who are not really familiar. Now, this is not, a comprehensive training course on options, obviously. It's quite a bit to consider when you're doing that. Just a very brief overview to show you what these instruments are. These are actually contracts. We're not buying the actual stock itself. I'm not interested in getting another stock certificate that I can hang up on the wall that says, "Congratulations, sucker! You paid you paid X dollars for this piece of worthless flotsam that's gone bankrupt." And no, there is no gold in this tunnel. So you just got taken on this new era developments that said that there's gold and there isn't because your best friend sucked you in at $60,000 to buy this. That actually happened to me, folks. That's why I throw that out there. So, the last time I bought some stock, yes, when a friend of mine, good friend of mine, told me about it. Apparently, he had some inside track in it. Anyway, nothing came of it, and I was down. I was out $60,000. That's what happens. Do not listen to your friends, your well-meaning friends. All right, not that they purposely want to mislead you. I don't think that's the case at all, but nobody knows what happens. Businesses fail all the time, especially resource companies. This was a resource company I lost money in, and a lot of companies fail. I mean, I laugh at these people who say, "Well, if you'd have bought Apple back in 19, whatever, 72 or something, yeah, or if you'd have bought Google back in 19, well, did you? And if you did, are you still holding it? You know, um, it's." It's unlikely that would have happened that you'd have bought those stocks and held on to them. Now, maybe you did. I don't know. Maybe I mean, you'd be worth a multimillionaire now, right? But generally speaking, we don't hold on to these things. I mean, things change. The whole world has changed since those days. I had a very interesting email from somebody who actually had uh, I cannot believe it. He sent me pictures of it. He had the yellow pages delivered to his house. The yellow pages up in a place called St. Catharines, Ontario, Canada. Yellow pages. I said, yellow pages. Yeah. And he says to me, he's looking at the data. He says, he said, it's unbelievable. He's shaking his head. He's shaking his head. There's no ads, nothing like that. But I think maybe somebody bought the rights to this thing thinking they're going to make a lot of money. He said all the data is at least 30, 35 years old. He's pulling out business names in this thing that he knows have not been there for 30, 35 years. And I couldn't believe it. So things are changing. I'm not sure how I got off track on that, but the world changes. And had you bought, Apple or Google back in the 1970s, it's very unlikely you'd still be holding them. So anyway, not sure why I got off that, but unlike stock, I don't want to hold stock. So I'm not interested in stock. I just want the money, as I'm sure you do too. We're here for the money. Options have various components to consider. Options are actually contracts. We don't want to buy the stock. We want to buy the option. And we want to trade the option. We want to sell the option before it comes to expiration because at expiration, one of two things is going to happen. You either have to sell it or dump it and take what the market will give you. It might be nothing. Or or you can convert it to the underlying stock. But bear in mind, they're going to take money out of your account to convert that to stock. There's a couple components here I want you to think about, and there's more, but these are the big ones that we talk about a lot. Data loss. This is the time decay. Time decay just for existing. Just for existing. These are contracts. So you have to make sure that the market is going to go in your direction and fairly quickly, right? And that's why we day trade because we got a pretty good idea as to where the market's going to go today at some point. John and I are just not that smart to determine where the market's going to be a year from now, 6 months from now. You know what? Even a week from now, we don't know. The other day, I thought the market was going to shoot up back to, I don't know what it was, maybe 746 or something. Well, it didn't. It found some resistance and came crashing down. I held on to some call options. I got out of them the next day for basically, I think, a penny profit or something. So essentially break even. Thank you for the gift. Actually, if I'd held on, it would have gone up a little bit higher, but I didn't like where it was going, so I was happy to get out of it. But you want to make sure that there's movement impending. There's something about to happen before you jump into an option trade. It's not a buy and hold strategy. Time decay just for existing. Then there's also volatility. Volatility is very important. This is the statistical measure of how fast and how much an asset's price is going to move up and down over time. So here's what happens. Whenever there's some news that is going to be upcoming that is going to affect the price of the stock, and this goes on companies, exchange traded funds, whatever, you'll find that the volatility will generally increase. It will increase. So what does this mean? Well, this means that the option value also increases, right? The options holders are holding out for a greater price because they don't know which way the market's going to go. They don't want to lose money on it. You want to just kind of stabilize things. Let's see, wait until the news comes out. If the news is going my direction, you can pay me my $8 an option that I paid $4 for, or whatever, right? So the volatility goes up. Now, after the news is released, the volatility drops pretty quick, back to where it was. My preferred implied volatility on Thinkorswim when it comes in somewhere between 15 and 25%, I'm okay with that. Usually like around 20, 22% is sort of the sweet spot. But anything over, say, 25%, I think, I know I am paying a lot for that option. I could get caught in the option, the squeeze, right? The volatility squeeze, that's what they call it. What that means is you end up paying, say, excuse me, $4 for an option, and then as soon as the news happens, right down, it drops down to 370, 375. You just lost a quarter. You don't want to get caught on that. You don't want to pay, you don't want to overpay for options. Conversely, when the volatility is really low, and I've seen this the other day, it was down for call options, I think it was around 5 or 6%. I think, I don't know if I really want to buy this thing because there's just not a lot of movement in it. Yes, it is cheaper, but will it come back and deliver the profits I want? Instead of maybe going for 6%, I might be happy with 3 or 4% if I'm going to go for a percentage. Or I might have to be patient and just wait until, I get a little more bounce in this. But the problem is I don't want to wait because I'm pulled between, waiting and the theta loss, right? The more I wait, the more theta loss there is. I always like to buy time, theta loss, not time. You're going to get theta loss no matter what, but you want to kind of minimize that as a percentage of the option that you buy. So by doing that, I like to buy time. If it's a Monday or Tuesday, I will buy the same week's Friday's expiration. If it's a Wednesday, Thursday, or Friday, I will buy the following week's Friday's expiration. Not that I'm going to hold it over those periods of time, but what it does, it minimizes the theta loss, the time decay. And even if I'm holding it for an hour, perhaps, or an hour or 2 hours or something, I'm going to suffer less of a theta loss than if I was to buy, say, something that's going to expire today. And I caution against buying same day options. Now, I know some people like to buy same days and expirations, and I do too at times. But you have to be very, very careful. You really want to make sure there's that movement that is going to be coming up on the same day. Because when the market, not if, but when the market turns on you with same day expirations, they are not very fast on putting the premium back into your option. Okay, they're not fast at all on putting the premium back in the option, and so you could suffer huge amounts. So you got to be very careful with same day options. Hey, but you can make a lot of money too when you get the movement in that option. You can make a lot of money. Anyway, I think most of you probably know all that. I'm guessing you do. So you want to make sure that options are not a buy and hold strategy for long periods, and you're going to benefit from the movement of the underlying stocks. You're going to benefit from the movement, not from holding on to them. These are not buy and hold strategies. Unlike, say, your retirement savings plan, where you're okay, I got lots of time. I'm in my mid 20s. I'm a working, yeah, working stiff. I'm a salaried employee, and I'm putting in a lot of my money into the market. And I'm going to just keep, adding to it because my retirement is, 40 years away, right? 40 years away. And I will tolerate and go through the ups and the downs, the ebbs and flows of the market. You can do that because you're going to be buying the stock and the equity and the exchange traded funds or whatever. But as an options trader, you're not going to have that luxury. You don't have the luxury of that. So all I'm going to tell you right now, you must know what you are doing with options, or else you will lose your money. Any new traders, take heed, okay? You must know what you're doing, or you will lose your money. I've seen studies that it's all over the place. I don't think they can actually accurately determine this, but I've seen anywhere from 93 to 98% of the people that get into options trading lose their money in the first year. Simply, they blow up their accounts, never see them again. All right, so bear that in mind. All right, the 2026 goal. This is a little strategy we started way back in January, early January, where we track all the trades in the trading room, and we are recording these as if we are only buying 5 contracts per trade. All trading room contracts or trades are included that we narrate. Anything that we do sort of in the background, we do not include in this. Only the options that are publicly revealed to you, the trades that are publicly revealed to you. If you were to have done those trades, you would be up over $35,000 right now. All right. So, and that's looking pretty good. Your average investment's probably somewhere around, I don't know, I want to say 3,000, 3,500 or something like that. 5 contracts. These are the prices that you're getting in for. These are the prices you're getting out. I've had some losses in there. It's been not a bad week. John and myself, we've been trading these here. And for example, on Friday, we made $650 between the two of us. And this, of course, does not count commissions. There's that trade that John had done July the 23rd. That was Thursday. He was in there for 51 seconds. I was wrong. I think I said 58 or 56. It was 51 seconds. He was in a single trade. Just curious how much he made on that. $195, 195, divide that by, well, let's see, look at it this way. 804 less 7. He bought it for 765, was it? So he made 39 cents. Divide that by 765. He walked away with 5% on that. That was a good trade. That was a good trade. All right, folks, I'm going to throw out a little questionnaire for you. If you could identify one key trading weakness that you have, what do you think it would be? Not understanding the program or the strategy, failing to identify where the market's going to go, or trends, or chart patterns, or Fibonacci levels, or that sort of thing, technical indicators? Would it be lacking emotional control or something else? Let me know in the questions box. I'm just curious because this way we can maybe tailor some of our comments and training to help help you in that regard. So I'm going to give you a minute or two to answer that. If you could identify one key trading weakness, what would it be? Not understanding the program or the strategy, failing to identify market projections, trends, technical indicators, or lacking emotional control, or something else. All right. Meanwhile, I'm going to get to the questions in a little bit. All right. While you're punching up those answers. Okay. All right. Question about delta. Okay, I'll get the question a little bit here. Um, Lacking emotional control. That's kind of the big one here. Okay. Lacking emotional control, failing to identify market trends, projections. Okay, it's pretty well those two. And not understanding the program. Okay, so all right. Okay, that's good. Over trading. That's a good one. That was actually one of my big ones, over trading. I'm glad you brought that up, Tim. Over trading. A lot of C's, lack emotional control. Okay, that's good to know. We should probably stress more of that emotional control thing in future webinars and certainly in the trading room. But there's this thing over trading. So, okay, so we have this kind of a running joke in the trading room. I do very well on my first two trades, and that third trade is what usually comes back to bite me. Uh, so, so now I'm controlling myself. I'm only going to do two trades, just two trades. I'll be happy if I make enough money to satisfy my goals, my daily goals on two trades. Why would I enter a third trade? Just so I can sit there and you know be wounded into the rest of the day and wondering what's going to happen and possibly have to hold overnight or repair the trade or why go through that stress and anxiety? When you lower your expectations to what you believe it to be, fair and accurate, attainable, respectable, and when you reach it, you should be happy because if you look at your log and your plan, your trading plan, that should make you happy. Let's say as an example, just as an example, right? Let's say as an example, you are out to make only, and this is very simple to do, 200 trades a day, right? $200 a day, should say $200 a day. Folks, do you realize that's like $50,000 a year? Something like $50,000 a year, right? $200 a day, 5 days, that's $1,000. Let's say you're only out to make $100 a day, which you should be able to do in your sleep by accident with the way we trade. That's $25,000 a year, extra money that you're making in first hour in the morning type of thing. Anyway, well, we're going to move on from that. Folks, I want to tell you about our programs that we have. Inner Circle. This is what was started back in 2010. 2010. When people started to course me and put, they said, Hugh, can you just put up on the board as to on the internet what you're looking to trade? Sure. And then that's what I did. So I sent out an email. I can't remember if it was I sent out an email I switched it back and forth, or they had to log in, something like that. Anyway, they were apprised as to what I'm looking to trade every morning. What particular option, kind of, early on, what I'm interested in, up or down. And then later I would give a follow-up report as to what I actually did, what I actually did trade. And then we used to have our weekly sessions, which we still do. And it was actually pretty good. So we continued doing that. Things have changed a little bit. We brought on John Johnson back in, I guess, about a year or so ago. He does the morning market analysis now, very comprehensive analysis as to where he sees the market going today. And he uses a lot of, various key indicators that he identifies and where he sees the market actually going. He's very accurate. And we do a follow-up report later in the day as well. And John also runs the weekly weekend review, not a weekend review, the inner circle meetup, which is Wednesday nights. If you miss them, not a problem. They are recorded. A lot of people get them later on because, on the other side of the world, 8 o'clock is like 2 in the morning, 3 in the morning. So we don't expect you to be up at that time in Europe. Folks, let us do the heavy lifting. Inner Circle, you get this report. $299 a year. Seriously, $575 a week? Do you realize you cannot even buy a cup of coffee a day for that price? And yet you're getting all of this concise, all of this analysis, all packaged up for you nicely and in your inbox by around 9 o'clock. All right. We scour the internet, all the various news feeds. John puts together a very detailed analysis on the technical indicators, marries the two, ties it all up, and sends you a nice little package. All you have to do is buy him a cup of coffee, 5.75. Take a look at these QR codes. By the way, if you miss these QR codes, don't worry. I will show them again at the end of this session. Day trade spy signal. We've had some people say, hey, listen, I don't want to go through all that. I want to learn anything and just tell me what to trade. We actually have two programs for this. The day trade spy signal is one, so you just carry your cell phone around anytime between, the market open and 12 o'clock. As soon as you get a signal triggered on your cell phone as a text message, just open up your trading platform, immediately make the buy, and immediately put it up for sale for a 5% gain. Walk away, come back. If not sold by 4 o'clock, just sell it at the market open. $3.99 a quarter or $14.95 a year. $3.99 a quarter. We're talking about, oh my gosh, we're talking here about, what's that, $30 a week? Well, it works out to about $6.14 a day for a particular trade that has been vetted to make you 5% gain on that. And it's been working very well. I think it's up around 88, 90% accuracy. I'm not really sure. If you are in front of your computer at 9:30 in the morning, you may want to look at the pick of the day. This is where, okay, so by the way, I should go back. The day trade spy signal is algorithm based. Okay, algorithm based. When the algorithm gives you the trigger, that's when you buy. Now, the pick of the day is a little bit different. This is where John and I collaborate in pre-market, and we bring together all the various inputs and see, and see which way we think the market is going to go. And when we have a consensus, then we send out the pick. Shortly after 9 o'clock, goes in your inbox. And then when the market opens, you simply make the purchase. Immediately put it up for sale for 6% gain. Again, if not sold by 4 o'clock, sell it at the market close. Now, the reality is a little bit different because we have to say that we close things at market close because of our arrangement with Eagle Financial Publications, because as day traders, that's what they expect us to do. But in reality, sometimes you might see, you know what, I can hold on to this overnight because I have a good feeling it's going to go in my direction the next day. And a lot of people do that. And that's when they really make some serious money. Folks, this is actually a pretty cool program. The pick of the day, it's very, very popular. It's been going for a long time. 6% is what you're looking for there. Even if you trim it down to 5%. Most of the time, I should tell you, these picks are actually delivered. The profits are delivered in just a few minutes as soon as you buy them. Again, $3.99 a quarter, just like the day trade spy signal, or $14.95 a year. If you just do it by the quarter, again, we're talking about $6.14 a day, which I don't even think buys you a half a Subway sandwich, does it? Maybe it does, I don't know. An excellent deal. And by the way, if you don't like these programs, you can simply call within 30 days, get your money back. Full refund, no problem, no questions asked. Your best deal here is $14.95 a year, but I'm just kind of going by. Take it for the quarter, try it. If you like it, keep it. If not, not the end of the world. Our signature trading room, hosted by Hugh, that's me, and John. John is a lawyer by trade, and believe it or not, he left the law profession to do this. He left the law profession to trade and to teach other people how to trade. I mean, that's actually pretty incredible. You just don't see that happening. He's a great guy, fun, very empathetic. He listens to you. He wants to help everybody. I think to a fault. These are interactive sessions. Learn and earn. You can make money while you're learning. Fully narrated. This is where strategies come alive, folks. Daily, 9:20 to 10:30 Eastern Time. Recorded for later review again. $24.95 a year or $6.99 a quarter. We're talking about $54 a week. What is that? About $10? $10.80, $10, $11 a day. Really? For the benefit of two professional mentors, literally in your back pocket there. So all I have to do is just pull us out, ask the questions, and we will strive to answer them every morning. Bear in mind, there are a lot of people online. We may not get to all your questions, but we certainly try. This is the best value, folks. And you know what? You don't have to know the strategies. If you know what calls and puts are, this is where you need to be. Many cases, we don't just tell you, talk about trading, but what we do is we cover you. By that I mean we give you the confidence to maybe, well, okay, the market's going against you. Just hold on a few minutes. Hold on, because here's what I think is going to happen. And then John and I will analyze it. Okay, it's coming down, but it's looking like it's going to bounce off this support and come up here, and it's going to, go back up in your direction. You'll probably be all right. I get this a lot where people say, you know what? I would have sold for a huge loss if I hadn't listened to you guys. You gave me the confidence to stay in the trade, weather the bad storm coming through, right? Weather the bad storm coming through, and actually, stay with the trade. And guess what? It came back in my direction. And in a few minutes, I ended up in a profit. We hear this all the time. We hear this all the time. That's one of the benefits, the key benefit of being in the trading room. Other people say, "How can you guys be so calm? You're in a bad trade, and just seem to be very calm about it." And I'll tell them things like, "Well, first of all, I have lots of time. I've got a week and a couple of days before my option expires, or I got to the end of the week. A lot is going to happen. I've got news coming out here this afternoon at 2 o'clock. I expect it to be good news for the market. There's going to be a lot of volatility kicking in. Just because it's in a bad scenario right now doesn't mean it's going to be bad later, right?" Anyway, you got to get into the trading room, folks. That's where it all happens. That's where it all happens. All right, get the QR code. All right, these QR codes are not payment links, by the way. They're information pages, and there is a link and in these information pages to subscribe. Just because you click on the QR code here does not mean that automatically, you get zinged for $6.99 a quarter. All right. Now let's get to some questions before I end up going overtime on you guys. I don't want to do that. I'm trying to be respectful of your time. Okay, so all right. Every time I click away from this monitor here, my screen freezes, and and it always catches me at the worst possible pose. I'm the most unphotogenic person out there. So, all right, okay, hello, okay, here. I did not check my junk mail. I did check my junk mail from last week from them, but I did not have. Oh, really? Okay. You know what, Robert? I am going to send. Yes, I remember. Um, I remember he won. He was. I think we had two winners. And he was one of the winners for our ebook, Triumphs and Tragedies, that I had sent him. It looks like didn't go to him. Maybe it went to somebody else. That's okay. I will send it to you, Robert. Okay, then I received 2 mail files, and then okay. However, it may not have come because I did receive 2 mails from. Okay, all right. I received. Oh, okay. So okay, Robert. Well, you've got both our ebooks, Triumphs and Tragedies, and Tips, Tricks, and Traps. Um, if I send you a third one, or you got them both. But congratulations. So we're going to have a contest coming up in a few minutes. So Robert, I'm not going to clog up your inbox with another edition of a book that you already have. Maybe even two copies. All right, Mark is asking, what is your phrase for job, job, job? If you have a job, I think I talked about this last week, maybe. Job, it's actually an acronym, JOB. It means just over broke, right? Those of you who have a job and nothing else kind of on the going, no gigs, no anything, where you find it's hard to make money, isn't it? It's hard to kind of balance. I would feel very handcuffed if I only had a job and was unable to actually make money, real money. Because then I would have to say, well, I'm only making X dollars and I can't spend any more because I'm going to not have enough at the end of the month. Job means just over broke. You seem to spend the money a little more than what you make, right? Isn't that sort of the way it goes? Okay. Here's another question here. What key indicators would you rely on to determine whether to hold or close an underwater position 2 days before expiration? Okay, Mark, 2 days before expiration, I don't want to be holding that thing because that data loss is going to eat you alive like a fast-moving cancer. It's going to rip through your option. Okay, so endeavor to get out of it. I would look at okay. Any news that's coming out that could move the market, you may want to hold on until that comes out. A lot of times, economic news in the morning will move the needle. All right. Things like unemployment claims, I mean, that's kind of in the morning, but it might have some PMI reports or this week you have personal consumption expenditure, GDP, some of these numbers. Take a look at the schedule, see when they're coming out, and hold off if you're there. Look at chart patterns, different things, but endeavor to pull out of that position before the end of the day. If you're 2 days out, especially if you hold overnight that last day, you're gonna get a huge data loss. You're gonna get a huge data loss, and unlikely you will recover. That's not what you want to hear because now you're stuck and you got a little bit of a loss, maybe a big loss, but you want to minimize the loss as much as possible. So I wouldn't want to be holding into the last day. I'd want to get out of it. So I would look and see, is there a potential breakout of a chart pattern, that's going to, give me my, a little bit of a, minimize my loss or whatever. And the other thing is I think if I got into it, I probably wouldn't even be looking for a profit. I would look and see, well, how much of a loss would I accept? Now, if it's going your direction, you might want to hold on and see where's it going to go. Is it a strong likelihood it's going to go back to that level where it'll give you a break even? I think if I was in a losing position, I'd be very happy to get a break even or close to it. So these are things, I would adjust my expectations, I think, more than anything else at that point and see if I can just take it. Sometimes you do end up in a profit because the market does swing in your direction very well. Is that something you can rely on 100%? Doesn't always happen. So you have to talk about minimizing your losses there. Next question. A lot of marks online here. Da, da, da. Okay. Okay. All right. Here's a good question here. If I buy an option at low volatility, then there's some news and volatility doubles. Will the price of that option also go up? The value of the option should also go up. Yes. Will it double? That I don't know. But as volatility goes up, the value of the option will also go up. Now, lately, we've been seeing a lot of wide spreads on bid and asks on some of these options. So you want to be careful about that because that means the market makers are kind of playing, they're kind of toying with the market and stuff. So, but yeah, if the volatility does go up, you could be okay. You should be okay. Like it should deliver a pretty good profit. All right, it should deliver a pretty good profit. All right, what else? Don't count on the excuse me, if the volatility doubles, which is rare, it's going to go up sort of, well, it's going to go up, but for that to double, something really major would have to happen, like huge, huge. I don't think you're going to get necessarily an volatility doubling. And if it does, I don't think your option, I don't know. I've never sort of encountered that where the option itself is going to double if the volatility doubles. But it will go up, should go up. Another question, how does delta fit in? So delta is the relationship between the option and the underlying asset. So if you have a delta of 50, and I like deltas over 45, okay? So I will trade an option over 40. If I have a far out option, far out of the money, it's going to have a low delta. And that means that if the stock is going against me, my option value is not going to go down very much because I have a low delta. So if the delta is say 50, if the stock moves $1, your option price should move 50 cents. If your delta is 45, if the underlying stock moves $1, your option will move 45 cents. That is the relationship. So an at the money option will generally have, I'm looking for deltas 45 to higher. At the money options will generally be around 50%. Okay, those are the at the money options. Okay, and so that's what low options are going to give you a cheaper price. Cheaper price is going to give you a lower optioned contract. And because sometimes people will buy cheap options. They say, well, I'm only paying 20 cents for the option. And I'll say, okay, well, that's good if you expect the market to really go up in that direction. And sometimes that happens. For example, let's say an earnings report comes out and you're thinking, okay, maybe Exxon is going to have great earnings. I'm going to invest in some really cheap options and see where it goes. And then as it turns out, options, Exxon report is actually good, very positive, whatever. And they can make a lot of money on those cheap options because as they go up in value, they're going to come into the money. Your delta is going to go up. Everything is going to come to life. That actually happened to me. I think it was in 2005. A friend of mine told me about Exxon and where he was very close to Exxon. To this day, I don't know if he had inside information or not, but he was very close. He knew Exxon like the back of his hand. And I ended up buying. He told me about getting some really cheap options because it's gonna go up. And Dave was absolutely right, 100% right. I bought a whole ton of, I think it was about 12, $12,000 worth of really cheap options. I think like 10, 20 cents or something, 24 cents. I sort of liked into them. And oh, I had a lot of options. I had hundreds and hundreds of options, hundreds of them. And within about 3 weeks, and I stayed with it, and the price of Exxon kept going up, and my options came to life. I ended up making about $250,000 in about 3 weeks off those options. I couldn't believe it. That's where I bought my airplane. All right. Uh, will that ever happen again? I don't know. Can't count on it. But you know what? If you don't mind throwing some money at some cheap options, if you really believe down the line those options are going to come to life, you know what? Give it a shot. Not something that we we advocate, but every now and then you do come across some stock that it's going to have that move. So. All right, to over trading V22 trades. That's Optimum. Thanks for that, failure to identify market projections trends. Okay. Selling too early, getting scared out of a trade, and then buying a little too late. That's another. Do you know I have about 3 or 4 marks on the go in the questions box? This is the craziest thing. I don't think I've seen that too much. Anyway, you know what? It's getting time. Oh my gosh, I'm going to do this again, aren't I? All right, you know what? It's time to play our game. Right? In the questions box, pick a number between 1 and 100. And thank you for that, Robert P. Don't worry about it. I get your new I'll make sure my next ebook comes to you. I'm actually thinking about doing another ebook, so I will certainly have you on my list. Folks, we are going to pull up our DayTradeSPY.com random number generator, your official random number generator. And what this is it just picks a number at random. All right, now, so I'm going to give you about 30 seconds to just pick a number, put it in the questions box. All right, put in the questions box, and the person closest to the number that we generate gets the ebook Triumphs and Tragedies. Or if you already have Triumphs and Tragedies, how about tips, tricks, and traps? You tell me. All right, you tell me. And another 10 seconds. And then now, if there's two people say within a couple points, you'll both get it. Okay, you'll both get it. All right, so I'm going to pull up here it is right here, the random number generator. That's not the number, folks. That's not the number. All right, I'm going to click on the thing here now, and I'm going to hit the button on the count of three, three, two, one. The number is. Oh, hang on a second. I got to make sure that nobody. Okay, Robert P is the last one here. Okay. All right, now three, two, one. The number is 39. The number is 39. All right. Let me take a look and see who the winner is. 39, 39. Let's see who's going to come the closest to 39. Okay. Well, we got some really good spreads in here. Ooh, Mark S. Another Mark. Yeah, he didn't even reply. He's in at number 37. 37. He's two apart from Teresa. Teresa H came at 38. You've been bumped, Mark. 38, Teresa. And it looks like the winner is Teresa. Teresa, I will send that book down to you soon after this the session. Do me a favor, Teresa. Put in the questions box. What do you want? Triumphs and tragedies or tips, tricks, and traps? Let me know your pick. All right, let me know your pick, and I'd be happy to give you the choice on that one. They're both good ebooks. They're quite lengthy, and I think you'll really enjoy them both. So let me know in the questions box. Okay, and which one you want? Tips, tricks, and traps, or triumphs and tragedies? Folks, there are the QR codes, and you'll want to take a picture of those guys and we'll see you the next time. All right. Been a pleasure, folks. The recording will be up on the website shortly. Have a good night.
I wanna know if you really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear. I know it's been on your mind for a while, but to get what you really want can take some time. You gotta be focused now, no play around, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear. Loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear. And there ain't no stopping now. You're the one. Shine brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell you what